Good morning, this is Tim McGowan for the Finance News Network. Stocks were lower on Tuesday as investors braced for another large rate hike due out Wednesday from the Fed Reserve. The Dow Jones Industrial Average shed 1%, the S&P 500 just over 1% and the Nasdaq just under 1%. The Federal Open Markets Committee began its two-day policy meeting on Tuesday, where central bankers are expected to announce a 0.75% percentage point rate hike on Wednesday. Yields on US government debt on Tuesday reached their highest level in more than a decade as the Fed's two-day policy meeting began, with the yield on the two-year Treasury note jumping as high as 3.99%. The yield on the 10-year Treasury briefly topped 3.6%. Traders are keeping an eye on the central bank's projections coming out of the meeting in an attempt to gauge how much further interest rates may rise and what that means for the global economy. It's not what the Fed Reserve does, but what it says it could do in the future that will be the most crucial points when the central bank ends its two-day meeting on Wednesday. Of note, the previous four times the Fed raised interest rates in 2022, in March, May, June and July, the S&P 500 has actually rallied 2.2%, 3%, 1.5% and 2.6% respectively. In company news, as we mentioned yesterday and after hours, Ford shares slumped after announcing that supply chain issues would cost an extra $1 billion in the third quarter. Overnight, shares of Ford were down 12.3%, wiping $7 billion off its market value. This announcement has come days after a profit warning from FedEx, which is seen as a bellwether of global economic growth. Across the sectors, there isn't any clear industry providing the market with support or direction. It's more of a case of underperformance one day followed by outperformance the next. Tech remains one of the worst performing sectors on the S&P 500 this year, and within that blur of red is the smaller subset of so-called Metaverse stocks or tech companies that are building virtual worlds for gaming, socialising and work. The investor Cathie Wood and Goldman Sachs were amongst those who heralded the Metaverse as the biggest breakthrough in consumer tech since the introduction of the iPhone. They predicted the Metaverse would be worth trillions of dollars by the end of the decade. But the rout in Metaverse stocks is having a tangible effect on shareholders big and small. Mark Zuckerberg, the founder of Meta, has seen his personal fortunes shrink by $71 billion this year, but it seems that investors' appetite for tech companies embarking on an ambitious, capital-intensive project has sunk as interest rates soar. On the currency front, the US dollar was up 0.4% with a broad strength on the major crosses. The Australian dollar weakened compared to the US dollar, buying 66.95 US cents. On the commodity front, iron ore futures are pointing to a 2.1% fall, gold lost 0.4%, silver was down just short of 1%, copper lost 0.3% and oil lost 1.5%. On the SPI futures this morning, they're pointing to just over a 1% fall on the ASX today. This is Tim McGowan for the Finance News Network. Have a good day.